Good afternoon. This is Robert and Sharon Porter of Trucking and Business, better known also as Team Porter, Trucking and Business. And we have a special guest on today that will be talking to us about the proper insurance for trucking, for trucking, proper insurance. Her name is Lotta Love Hawkins. So we would like to introduce you. And Lotta, why don't you let us know who you are and tell us some things about yourself, as well as let's go into what we're going to be talking about today.
Sure. My name is Lotta Love Hawkins. I'm an insurance agency broker out of Dallas, Texas. I own my agency and we specialize specifically in transportation needs. So anything from the motor carrier insurance, freight brokers, dispatchers, anything transportation. We even deal with international cargo. We can help provide for you. A little bit about myself. I also have a claims adjuster's license. So it's not just about selling, it's about helping people understand their policies, when it pays, when it won't pay. And then I also have a risk manager certificate too in the state of Texas. So a certified risk manager, which just means that I can tell you about different exposures in the business to where I can talk to you about your operational setup. Because really how you set up can offset even the use of insurance. You know, having a proper setup is just vitally important. And so I can spend time in a consultation to do that.
All right. Okay. Well, why don't we go into what you have for us tonight, based on having the proper insurance for truckers.
Absolutely. So tonight, I just wanted to talk a little bit about if you're thinking about getting your own DOT authority, just some considerations to make and how you know if you're needing to even make these considerations. So the first thing I wanted to address is just that I'm going to be focused on the motor carrier authority, not leased on or other type of situations, just so I can keep these different coverages all aligned so you'll be more aware of how they work. So when you set up a motor carrier authority, a DOT number, US DOT number, you have really two main ways to set it up. And that's interstate, meaning crossing state lines, or intrastate, meaning remaining in that one state. How you set that up initially actually dictates the next step, which is our first step in what type of coverage do you need. So many people get this coverage, they call it the wrong thing, which means they can purchase the wrong thing. So it's called specifically auto liability, just like your personal auto. But many people think it's called general liability, which is a whole different coverage. So, and I'll talk a little bit more about general liability right after this. So with auto liability, you have to have matching limits to your authority. And so if you're going interstate, the minimum is 750,000. But if you're staying within a state, it varies by those particular states. For example, as low as 300,000, like in a Mississippi, and on up to the 750, like in Ohio and Massachusetts. So each state has their minimum, which sometimes, again, duplicates the federal requirement. Sometimes it's much lower. So let's just go with the example of interstate, crossing state lines. So we said 750 is the minimum per FMCSA regulations, but you'll often hear people ask for $1 million policy. And I just wanted to take a few moments to explain what that means. So that is more of an industry request than a FMCSA regulations standard. 750 is your requirement. If you get 750,000, you've met the requirement. Now you can become an active authority. And it really ends right there. All that's required is that liability, the auto liability, to match the authority. So you can actually be active, but you're probably wondering, but now what? I'm active. So that's when we get into all these other coverages. So I paused there too, because the next step in making sure you have the right coverages is who you're talking to. So to find the right coverages, talk to the right people, because once again, it varies. Your national brokers or shippers, like in Amazon, and I'm going to just kind of pick on Amazon right here, Amazon Relay. On their website, it's very clear on the list of requirements that they have. Each time you talk to any broker, anybody in regards to business insurance, you want to ask them for what is their list of insurance requirements. Because as I said, it differs. One broker may not care that you have general liability. The other one wants you to have $2 million worth. So you want to basically use their requirements as the checklist needed to get coverage. So if your broker is requiring 1 million, even though 750 is the minimum, you're probably going to want to get the $1 million so you can do business. But that's, again, strictly a broker or industry standard. And it's just really become more of the norm. So that is called auto liability. You want me to just go on through the entire list?
Yeah, definitely.
Okay. I didn't know if I was talking too fast.
No.
So as I mentioned too, after auto liability, the coverage that's most often confused is general liability. But general liability is not specific to a moving vehicle, hence the name, general. So general liability, if you're more accustomed to just standard business, a brick and mortar, would often be referred to as your slip and fall insurance. General liability covers third-party damages that you as your business or the people in operating may cause harm to the general public. So things such as there's some damage, usually it's $100,000 worth of damage protection in there, but it's more, again, a liability policy. So it's the responsibilities to have bad faith. You know, if you're advertising inadvertently, you know, kind of shame someone else. Hopefully you're not doing that kind of advertising, but if it did, if you said you're better than Amazon and Amazon said we're suing you for libel, if you have a general liability policy, you would be covered. So it's kind of a mix of things. It's about contract completion. So a lot of your carriers, again, the larger carriers that are more concerned about contract obligations and meeting those responsibilities will ask you to have general liability coverage.
Can I ask you, excuse me, may I ask you a question based on that general liability? With that general liability, if you are an owner operator and you are operating under someone else's authority, can you still get that general liability for your own corporation, even though you don't have your authority?
Yes, you can. Because anybody can have it. It's actually one of the coverages I really suggest that dispatchers have.
Okay.
So any damages that you can do to another party, more so contractually than, you know, physical damage, even though there's a little bit of physical damage coverage in these policies, that's mainly what general liability covers.
Outstanding.
And it's really affordable too. Most people are like, they're going to hear these numbers and it's like, whoa, that means this policy costs X amount of dollars. But especially compared to your auto liability, you're going to see how affordable it is. So with the general liability, you'll often hear limits of 1 million per occurrence with a 2 million aggregate. And so they'll have like 1 million/2 million kind of written as shortcut. What that means is per occurrence, per one-time claim, they will pay no more than $1 million. But for the lifetime of that policy aggregate, they'll pay no more than 2. So unless you ask for a 1 million, 2 million, they'll by default give you a 1 million, 1 million, basically a one hit wonder type policy. You know, you have the claim, it's done type situation. So with general liability, again, to say $1 million, and I think this is also where that confusion comes with what they're being told by brokers to get an auto liability for $1 million, but then also get a general liability for $1 million, and those terms start, you know, seeming like they're the same. General liability also covers, again, anything non-motor vehicle moving, you know, as it pertains to your business. So let's say you have someone unloading your truck and they slip and fall. As I said earlier, it's referred to as slip and fall insurance kind of in back in the day. Some people still just call slip and fall. That's what that covers. The truck wasn't moving, so there's no coverage under your auto liability policy. So that's where a general liability policy will help out. Now, also other circumstances, let's say it was slick inside of, the trailer and they fell, then that would be totally on you. But if, again, they hurt themselves as they were dragging something onto the dock, then that would probably be, the warehouse's responsibility. So I pause right there because I want everyone to know that whenever you turn in a claim, the next part of a claim is an investigation. So you'll hear a lot of stories where people say, that didn't happen in my case, or what happens if, and all these million scenarios. And I love the farmers insurance commercials you see on TV where they got little weird parts of a squirrel burning down a Ferris wheel or all weird stuff. But that's because that's how individual and case by case, these claims are paid out. As a claims person, a licensed claims adjuster, we get a case and we're told their circumstances. And depending on how much or how little information is provided, we have to make judgments on, does this fit as paying towards this policy? Do the policy activate per these circumstances? Sometimes it's a request for more information, but the key is to just get it right there so you can make a yes, it pays, no, it doesn't, or yes, it pays, but at a limited amount. And so those guidelines are pretty clear and cut in the software that's often used for claims. But just know that that's your opportunity still to contest things, to make sure your claims are paid, because if you have your paperwork to defend you, if you have policies and procedures, you're following them, dash cams, anything that will help prove your case is going to be advantageous for you, because you have to remember too, and I'm saying it as a claims adjuster, who does the claims adjuster work for? They work for the insurance company. They don't work for you. So you have to really be your own best advocate in making sure as the insurance adjuster asks for information, you have it. In fact, you have more than enough to show you are not liable. This was truly an accident. This was me, just because accidents happen. That's the definition of an accident. Unforeseeable. I took all the caution and precaution, but it still happens. So let's move on to physical damage. Physical damage covers the outside. A lot of times, and this is almost how insurance agents know if you're a newbie or not, is people will say, I want full coverage. It's not full coverage. We're so used to saying that with our personal vehicles. It's the same type of coverage, but in the commercial space, they want you to be a little more specific. So saying physical damage kind of means the same thing as full coverage does for your personal vehicle. It means it's going to cover damages to the vehicle that are not the result of a third-party collision. So again, when an accident happens, someone else causes those damages, they're responsible for them. But if you kind of cause those damages, your one car accident, you and the wall, you and the dock, things happen, you and the rock, those are considered comprehensive claims, and you'll have to have physical damage in order to have those covered. So physical damage coverage also asks for you to tell us how much is your truck worth. And that's kind of one of those rhetorical questions, because it's like, well, do you mean how much I paid for it? Do you mean how much someone else would pay for it? Do you mean it could actually mean any of those scenarios? If you have a loan against your truck, usually it's best to just do the loan amount because it's backed up for it. You have, it's a vested interest, and also your lien holder will insist that you get the loan value insured. And that's what they're saying. They want the stated value for your physical damage coverage to be the amount of the loan. However, what if you bought your truck cash, flat out, or you got it at a really good deal? Now you're at a place where you have to decide, is it financially feasible for you to go ahead and insure it for the full value as if it was to replace that entire truck? Or do you want to discount it to save on monthly premiums? That is strictly a judgment call. There's no one that's going to say you have to do one or the other. So it's totally up to you, the amount you choose for physical damage, because it is directly impacting how much you pay on your monthly premium. So you'll have people that just say, you know what, for a cheaper insurance rate, I'll insure half of the truck. I own the truck, so no one else is coming down saying it needs to be for the full amount. But that's totally up to you. All right, going to cargo. Cargo coverage can be really particular and confusing. So the first two things I want to say about cargo. So again, referring back to your FMCSA, or I'll call it from here on a safer profile, because that's the more direct screen that shows the information to which I'm talking about. On safer, you have commodities listed, general freight, auto hauler, all those things checked off, and even a box for other. So what that is a self-disclosed list of what you plan to haul. There is no backing to that, other than the fact that hopefully your cargo policy reflects it, but there is no checks and balances. So if you went and said that you do auto hauling, you've already bought your insurance, because we do screen that profile to kind of bring up those questions. You have auto hauler on here. Are you doing auto? And you say, no, we're going to tell you to take it off. But if you turn right back around and put it back on, there's nothing that signals your insurance that you have auto hauler listed on that profile. So that's my way of also telling you, be aware. If you're in a position where you have to vet someone else's policy, ask for the policy. Don't go for what the safer says, because that's self-disclosed. And a lot of people, unfortunately, because they're vying for certain contracts, they want to get out there. I'm seeing this a lot with these intermodals. Your policy is not an intermodal policy, but you click the button. They're trying to get the business, a little bit cart before the horse. They're trying to get the business, but their policy doesn't say so. They're saying that they're hoping to get the business and then change the policy, but little do they know, you have to have the policy to get the business. So it's kind of a weird dynamic, but I really like to educate people about that, because they'll look on that profile and say, oh, they're doing lumber. Did you look at their policy? In fact, unless they say they're doing lumber, it's probably an exclusion and they can't do lumber. So what you think they can do, because they said it, and what an insurance company is prepared to pay for can be totally different. So make sure when you're looking at a cargo policy, you're looking at the listed commodities. Now, that's also another area where it gets confusing, and it's so up to interpretation, because you're not going to list every single thing you ever put in the back of that truck. It goes more so in categories, and the categories are based on exposures and risk. So very obviously, refrigerated goods are refrigerated goods because they're climate controlled. Mm-hmm. So you're not going to mix that in with freight, general freight, because it's a specific, it has to be climate controlled. You'll have things like tobacco. Tobacco is also climate controlled. And a lot of times, if you don't list it, it's not covered. So there's going to be a list as you apply for cargo insurance of what they call exclusions. It's all the stuff that's not included at the rate to which you first selected. If you see something on there, for example, you say you're doing refrigerated produce, but you want to do eggs, that's a different category. So you have to explicitly say you're doing eggs because of the fragility of them in order to have that covered on your cargo. But do you have to go and say, I do cabbage and then I do corn? You don't, because it's still under the same category. But to be safe, always just refer and ask if it seems like, and usually your brokers and shippers are really good at being like, let us look at this policy. We're looking for the specifics. Like if you do grocery runs, beer and alcohol, you have to have special clearances and such to have a full load of beer and alcohol.
That's true.
If you mix your load less than 50%, you don't have to have those clearances. So who is checking for that? Most likely it's your shipper, because they're like, hey, we don't want to do all that extra paperwork. Let's mix your load. But you also have to do it for yourself, because if they are, again, pushing more than that 50%, if something happens, you may lose the claim because of it. So it's really important to get really to as granular as you can with the cargo policy, just to make sure you're protected, because unfortunately, more than accidents, cargo claims are more common because your broker just wants to save a relationship with the shipper. And a lot of times they're like, oh, my guy, my lady, my trucker has a cargo policy. Notice they use yours, not theirs, because theirs is actually designed to only pay after they use yours. So they're going to use yours. They have $100,000 to use of your policy. You gave it to them in order to do business with them. They weren't keeping that for paperwork's sake. If someone says there was a scratch, they have no problem reporting it because it's not even out of their pocket. So that's why it's really important as well to make sure you're dealing with reputable brokers, because you gave them so much financial leniency in what is in your policy. You want to, again, have all that stuff written out. This is what went in there. You have, your checks. This is on the BOL. Any difference, any lack of instructions. And then you get there and then you're told that they're not going to accept it. This didn't happen. This wasn't in here. You want this in writing, because now instead of them just pulling out, oh, that's a cargo claim, let us just get our money. No, because that means my insurance is going up, not yours. So be very careful with those cargo claims.
Okay, so basically, why don't you let everyone know how they can get in contact with you based on trucking insurance? And we'll list the information in the description below. But how can people get in contact with you?
So to do a quote, it's lrmctrucking.com, and that takes you directly to our quoting page. So that's to get a quote. To follow me on social media, I'm most prevalent on Facebook, and then I have all my other stuff on here. So my full name, Lotta Love Hawkins, on Facebook. And you'll be able to see the different communities. I have the websites and such listed on my Facebook profile.
Honey, I'm gonna let you do what you need to do, and it's just been wonderful.
You're going to be our special guest on the Clubhouse November 16th at 11 a.m. That we normally do every Tuesday. So we look forward to moderating with you then, to add value to that room. So we thank you for tonight.
Thank you.
And to everyone else, be safe.
All right. Have a good evening.